Hello friends, hope all is well. So before we get into the good stuff, I'd first and foremost like to just explain that throughout my personal trading journey, I did, however, before I do go into that, I did explain to you the chart flip and having the candles black and so on. So I'm just going to go in and show you exactly how that's done, and also turning the wicks a particular color, because going forward, a lot of the focus with the strategies and mechanisms for reading the market for the future videos which you are about to go into rely, I won't say rely heavily, but they do rely quite a lot on this system. So pulling up a few points at the moment, looking at GBP AUD on the hourly, GBP has been on a little bit of a bull run recently off the back end of some Brexit news, and we are now coming into the last quarter. It's currently the 23rd of September. Has been a while since I actually recorded the most recent videos, which you may have watched above on the other tabs with the Astro tracking. A lot's actually happened in the market since then. So what I'm going to do is I'm just going to go through a few points and factors as to why I do recommend turning the candlesticks and the wicks a different color. Now, I've always strived in my personal journey to be more, and I always knew that there were gaps to be filled where I can maybe find out more information or put something together, whereas it can boost maybe my trading rate from, let's say, 75% to maybe even just 78, 79 or 80, and even just ease that psychological factor where I can maybe even hold trades for a longer period of time, bullish or bearish. Or on the flip side, I can spot certain trades that rely heavily on more or less the wick formations on lower time frames. And all of this will come together as we go along. So at the moment, GBP AUD is more or less pulling back from the highs of 8,500, 8,450, 8,500. I was actually expecting a breakthrough 8,500, but early this week, it's currently Monday, we are getting that pullback. Now, if you look at the 4-hour time frame, and we just look at the previous price action, if I just compare, okay, so my current chart at the minute, GA. If we just look at the price action recently, so what we had the full pullback from exactly 1.8497, so more or less nearly the round number, psychological level 85. We had the pullback. Now, if you were short within any formation, whether it be 4-hourly or this, I can just tell by looking at this price action, this would have been an hourly or 15-minute move to the downside. Let's say you were short in here on the 15-minute time frame. Market continues to give us some momentum. Boom, spikes into 8.4 right there where the crosshair is. And the next 4-hour candle, we test into that region once again, and we can also see this general area of resistance, which is now supportive. We can see that, boom, we have a huge boost. Now, this candle here, if you were short in this area and you were monitoring on this time frame, this candle here will force many people to actually have and make impaired judgments and decisions on that short trade, and maybe even get out early, or maybe just, you know, be a mental nuisance altogether, because you're thinking, oh my god, look at this green candle, bullish engulfing, I'm sure, you know, it's coming up more or less to break even. Should I get in? Should I get out? You're looking at your phone, you know, you constantly, your mind is drawn into the markets, and you can't really go about your daily business, and it's also taking a toll on your overall happiness and your mood and tone for the day. I've been there, done that. So we can see that, boom, we spiked back into the regions of previous highs before we went into the low of the previous 4-hour candlestick, and then we actually roll over in the current direction. Obviously, we have this was Friday, so we have the gap over the weekend, but generally speaking, if it wasn't a Friday and this was just intra-week, let's say Tuesday to Thursday PA, then we can get distracted by 1 and then 2, even though it was a solid short from whatever we've seen on the 4-hour. Let's have a look at the hourly as well. So on the hourly, in this in this mode, okay, I can see where 8.5, we came up to closely testing it, but there's various elements where we can actually take short signals around this region and actually get into a comfortable short trade. Okay, number one, if you were in, let's say, just a simplistic breakout, we have the retest, had a shooting star candle there, and then we do run into the lows, and then we ping all the way back up. But generally speaking, time frame dependent, If you look at the 4-hour time frame once more, we are looking for maybe a deeper pullback on GA. This level, we could come up to make one more leg before that pullback and that downside move, because we do need a little bit of relief on this. But generally speaking, if you were working on the 4-hourly, you want to more or less hold that trade short. You're going in for maybe an intra-week swing position. But you can get distracted by all of this noise right here. So if I just extend this box across, you can see that we just came back into retest 1, 2, 3, 4, and then the 5th candle breakdown. We have the 4 spikes there. We're just revisiting that area, and then boom, the market starts to slide back down. And we have taken out the lows of this area right here. What I'm getting at is more or less the candlestick can actually be a distraction, not so much to your intraday trades, because we are going to be basing trades on the hourly and the 15-minute, but more or less for your 4-hour and daily positions, and also monetization of the current trend and how that daily candle finished, how the 4-hour candles finished. Shall I stay in the trade? Shall I exit the trade? And so on. So personally speaking, I have just found that removing the colors of the candles can take away the pulling of the heartstrings at times when you're actually in a position, when you know full well it's time for a pair to retrace or whatever, and you want to hold it for maximum profit potential. So it's something that's helped me. You don't have to follow my lead, but I am going to be going into all of the rest of the material with the setup I'm about to just lay onto the chart. So number one, what I like to do is just go into the settings and go into crosshair. Okay, I want crosshair, I want it to be line, that's it. Solid line. I don't want any grid lines. It's your preference. Me personally, I hate it. I like to keep the charts as clean as possible. Scale lines, black. Perfect. All right, so symbol, I do prefer that on the top left right there. FXCM is my chosen provider for the data feed. I explained why in the last video above on some of the foundational material. Alright, so I don't really like any of this. I don't need that. I can see it with my eyes on the charts. So going into the candles, okay, so wicks, me personally, I like the blue. Alright, so I turn the wicks blue and the candles black. Candles black. Now, again, this may take some getting used to, but it does assist. It does assist with the scope of the market, holding trades for maximum potential and focusing primarily on, see the wicks, now I've changed them a different color. Some people prefer red, whatever it may be. This is just something that's worked for me. So my focus overall, let's go back to the 4-hourly. And we look at this 4-hour time frame. So on the hourly, I will always scale down to a smaller time frame to see where I can actually refine an entry. But we have the pull here, which is the shooting star candle. Again, I can see every single candlestick formation on this chart because I've been trained to do so for so long. So it just takes like baby steps of learn this, and eventually it comes together naturally. But more or less where you program your subconscious to a level where you can just see it on the chart and you instantaneously know, and you also have that instinctive feeling as to where price is particularly going to pull into, and you can clearly see the candlestick formations. So here we go, price boom rallies into this area. Okay, so we have 1, 2, 3 tops there. So if I just line the crosshair up with the bodies of the candles, we can see across here. Okay, and this is why I like the crosshair solid as well, because I've now got to a level where I am going to be plotting on a lot of lines and zones and areas and stuff like that. But me, I like to keep it all into my head, and that's just something that's come over time. It's just a small goal of mine. So I like to just keep the crosshair black, keep it nice and clean, and I can just see by eye certain areas and levels in which the price is reacting to and from. So here we can see spike in, spike out, and this is the bullish engulfing. I know it's a bullish engulfing even when it's black, because I've been trained to read the candlesticks for so long. But what I'm actually looking for in this area, if I was short anyhow on the 4-hour or the hourly, is number one, okay, we have this boost back into this region right here. We can see that 1, 2, 3, 4, 5 candles, okay, the wicks pierced the top end of the box. When I draw the box on, I want to just keep it to the bodies. You can have a play around. Some people like the wicks, some people like the bodies. Maybe, I can't remember, but on the last video in the toolbox I may have said draw it to the wicks. Personal preference, because of market conditions, it really does depend. But here I'm drawing it to the bodies. It depends how fast you actually spot that range. So this range here could have been, let's say, late night Tokyo session, then boom, we break down into London, pull back into US, and then start to float, and then the trend continues, or trend reverses in this case. So what I'm actually looking for here is where liquidity lies, where the wicks are actually, money's going from here to here, then here down to here, and again I'm just waiting for GA to make its mind up as to what can actually occur next. So very, very simple and straightforward. Just by turning your colours, your candles that colour, and actually focusing on the wicks more. Here I can see 1, 2, 3, 4 wicks, and then we have the pull down there, which is a bearish engulfing, and then the market starts to well, again, sloppy PA because it was Friday evening, but then today we've actually taken that low out. I do expect GA to pull back before the intra-week cycle continues or resets itself, and then all of this information is going to be on future videos, so just hold tight. But here, watching this and seeing this spiky price action, if I was in, let's say, just a simplistic short of, okay, box has been broken down, wick's been broken down here and here, stops on the opposite end, we have the test back into the mid region, and then we fall down. I mean, that there is a decent trade in itself. You can spot this and then spot this and say, holy shit, let me get out of this trade now. And that could be one position there, boom, in, out. Here you see the thrust and the drive back to the upside, but here there's two things that can go on. If this candle is green in particular, you can actually get too excited and maybe put in a buy position, because again, the green and the red, especially depending on session times, all of this is to come. But this candlestick in particular here could force you to act on emotions and jump into a long. But then if we just step back and just say to ourselves, okay, let me just see what price is doing. Boom, money's come out there, from here to there. We've consolidated. So if you were long, you would have been in profit. You would have got a little bit excited, 10, 15 pips, and then price breaks down. However, what we can actually see here is we're actually retesting into that box area. Okay, again, in these small consolidation zones, this is where money is being collected and distributed, buyers and sellers. So what can happen here is it's coming to pick up more orders in order to force the price short. It's just A to B, A to B. And yeah, as I'm saying, is if you would have got trapped there, boom, you would have been stopped out by now, because look at price, it's taken out that previous low. You would have either put a stop below this candle or below the low, stopped out, and now the market's probably going to continue, make a new leg, and so on and so forth, roll back over. What I'm trying to say is that if we actually focus on the material that I'm going to be providing forward for everybody, and look and listen carefully and make notes as you go along to certain principles as to why the market is moving in certain areas, how to read it adequately, efficiently, and simplistically, we can actually refrain from getting into emotional errors and mistakes. And you know, even here, if you were holding a short, you see this, you might be out the house at the time. There's so many different variables as to why you're not looking at the chart. You could be at work, you could be at the house, you could be at the gym, whatever it may be. You see this pullback, you're like, oh shit, you look at the chart, and then, but you can read, okay, cool. Only if price breaks above this region, number one, you will be stopped out. However, you could stay in the trade after you start to monitor every hourly piece of price action here that the wicks are forming. It's just coming to recollect some money, liquidity, in order to actually form a new low, which it has done. Looking at the 15-minute in this case, again, I don't really want to go into this right now because this is more later on when we're looking at 15-minute time frames. But you can see price breakdown from high, significant high, lower high, lower high, lower high, boom, does its thing. That's a nice move there, swift move. And if I put the crosshair at the bottom of the bodies there, you can see where all of the candles couldn't really surpass 1.8394, more or less 8400. Okay, right there, and then boom, we have that price boost. So if you're good and if you're fast and if you're on point and you see these areas, so what I would personally look at was spike 1, spike 2, holy shit, okay, get out of this trade if I was in it, but look for a potential to the upside. Come into the 15-minute time frame, and here we are. We can see all of these spikes throwing to the downside. So what's happening is money's gone from A down to B, and now it's going from A up to B, but it's also creating a general price structure as it goes along. And you can also see 8450 where the crosshair is, break straight through that. So look at the next region. The higher region is 8.5. We don't actually reach that. So from here to here, there's a nice gap as to where money can be collected in order for the price to roll back over. So spike, 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 weakness, and then roll back over. So what I'm more or less trying to explain is that if we focus on the wicks and the certain things and elements that I'm going to be providing to you, rather than, again, you can try both. It took me a week or 2 weeks for this to actually sink in, and then it become quite pretty straightforward. We can actually eradicate emotional errors, because the emotional errors, even if you have number one, a decent strategy and a decent outlook on the market, the emotional errors are what can actually just destroy us in 1 day or 1 week. This is generic information. I'm sure you guys already know this. Then if we go to option I, flip switch, see how that looks to the opposite end, and yeah, we can just have a little bit of a play around generally with what's going on here. So if I go back to the hourly, I'll always combine the 4 and the 1, and then go into the 15 if necessary. With the 15, what I'll also do is I'll set this up on the other screens. Whoops, XRP. Set this up on the other screens, but on the left side, I will have all of my analysis, and then on the right side, I will have the 15-minute chart blank like this. Okay, because a 15-minute chart, if I do have time to be at the computer, I'll probably just flip between the hourly and the 15. I like the 15 to be clean, but I'm also looking over here at which levels the market is actually running into. So I'll set all my levels, and I'll have everything on the left. Then I can just tile just quickly. Okay, cool. There's the hourly. Let's have a look at the 4. 4, I can see a little bit of price exhaustion at the moment from this downside move. We can see that we have 1, 2, 3 wicks. This whole entire area is a vulnerable spot for GA, and we're actually testing into 8350 now, which is right there at the crosshair. So if you look across, my mind is focused primarily on the wicks and the previous formations, because that could be a higher low, and this could now be forming a new higher low. So over here on the 15-minute, I'll be looking for, okay, can I find any base point in which I could take advantage of a potential long trade if this now decides to flick back up to the upside and maybe give us 100 quick pips? Then I'm ready for maybe alternative move back to the downside. So look at this wick region, wick region, wick region. The colors are completely out of my mind. And what I'm looking for more or less on GA right now is break to the upside. I'll look for a pullback and wicks to be thrown to the downside anywhere in there or above the box. And I will go in for, let's say, look, you got like 80, 90 pips. That would be classed as more of an intraday trade. At the moment, it's 4 p.m. So no trades will be placed at 4 p.m. onwards, because of the average daily range more or less being achieved. But there has been 1, 2, well, it's daily open, spike to the upside, and then we have price breakdown just there on the 15-minute. If I just tile it with, the hourly, my bad, over here, what I was looking at is this region, the lower the bodies. Again, you're going to learn all of this shortly, but I've brought that across, and if I want to have analysis on there, I'll copy and paste it to this side of the fence. So price, as you can see, spike to the high, price is breaking down, breaking down, breaking down. Boom, momentum candle right there, which is this price breakdown, and that on that closure indicates, okay, cool, this entire area has been taken out. Let's see if I can ride this lower. And even from here to here, that's 50, 60 pips anyway. So we can really, really take advantage of the market both directions, regardless of trend. Obviously, we want to go with the trend, but we can spot intraday moves, which we more or less have to be at the computer for and be switched on. I'll go into my routine in more depth later. But what I'm trying to express is that removing the obstacle of colors, okay, some people may not agree with this, it's totally fine, it's just something that I've found really does actually improve the psychology of my own personal trading. I do recommend for everybody to actually give it a try though, give it a go. And finally for this video, before we move on to the next, we actually get to the charts and we start cutting things up, we go into color theme, and you can save as, I've saved it as cap. You can save it as whatever you want. So if you do want to swiftly just move back to color, boom. Okay, color theme, as cap, boom, there you go. So save that, and let's move on to the next video. Any other talking points that I need to just address here? I've already done one TradingView setup video, even in the old content there's one there as well. So most people should be proficient on TradingView now. So going forward, we are going to go into the refined viewpoints. if you combine all of this new material with my psychological videos, it's going to boost you far. It will really, really, really boost you. Once I've finished a main block of all of this material, I will be doing weekly updates and showing some personal trades and stuff like that going forward. So I should just give you live, real-time examples as to how to really just dominate this shit. But I'll say market's pretty slow today. If I look at gold at the moment, so gold at the minute, if I just showing you a quick brief explanation of my focus. Now all of this in the next videos you're going to learn as to why I put these markings here, there and everywhere. Now what we looked at is gold breakdown, boom, smash. Okay, we have a little block here where price starts to move back. So price comes in, price comes out. So again, I'll explain that afterwards, but secondary retest, third retest, and then price starts to advance to the upside. What I was looking at early this morning on this 4-hour time frame is, again, eradicating the colors. I do know red, green, green, red, green, because I'm trained in that respect due to my chart time. But what I'm looking at is wick, wick, wick. And where these wicks thrown into, if I just use the cross line and keep things very, very simplistic, I can see where these wicks are being thrown into. And then here, this spike, boom, is taken out by this candle, so the momentum comes through. But we've had 1, 2, 3 spikes to the downside, 4, 5, and gold is still going right now. What I'm now looking at is the peak of this area, 1527, gold may tap into and then rebound from. Tiling that with a smaller time frame, even just simply put the 15-minute, look what we can see on the 15-minute. So this price action right here, the 3 spikes, is 1, 2, and then 3. This here, this push to the upside, or if you're smart and if you're fast on the mark and you see this candle close and form, okay, and you know that, okay, cool, 1, 2 rejections to the downside, here's a third one, let me take that. You can take that trade as soon as that candle closes, or then if you wait for confirmation here, again, dependent on if you are at the computer at the time, boom, straight into profit. Minimal drawdown trades, especially on the 15-minute. Tiling that with the hourly, look at the hourly. 1, 2, 3, 4, 5. I'm not looking at any of these fucking colors. I'm looking at the spikes. I'm looking at the PA as to where market is actually picking up money and then flinging it in the opposite direction. Here again, boom, momentum straight through. Even from here to here, that's 30, 40 pips. Now we're at this region which I've just plotted on. We can actually pull back. So again, hopefully some of you guys can actually see and consider why I actually choose this and why I'm going down this route, because we can actually get a much better viewpoint of the market. And as I say, you're going to see for yourself as we go along, and then you can be the judge. So I'm going to wrap that video up. I just wanted to, again, show you guys what is good over here. I think GA is going to really pull up now. It's going to really pull up. What is going on? What is good? Save that. Again, you know, wicks, put them green, put them red, whatever it may be. This is just my color scheme going forward. So let's get on to the next video, and I hope you enjoyed that.